Welcome everyone to Smart Investing with Zach, Mia, and Steffi. Today, Clem is not able to be on the show, so we are gonna talk about some naughty stuff. Me and Zach. How are you, Zach?
I'm not sure I'm qualified to talk about anything naughty at all, but I'm sure you can take the lead on that.
Right. So many times you mention about small caps and the fact that in the current market there are opportunities obviously there are bigger opportunity when we are looking at small cap. And you are not definitely the only one saying that. Or which company that is an interesting company that you have recently came across that perhaps is not one of the few that we mentioned over the last couple of sessions. It might be something a bit, maybe in a different sector or something just upcoming. Do you have any more, do you have any specific new gems that you want to kick off with? I don't want to start with politics yet, so I'm trying to kind of bring some tips at the beginning of the webinar.
Yes, well, I think there's it's not a done deal that small caps are the best and large caps are rubbish. In fact, very much it can be the other way around. And normally, I'd say, you have companies which are making cash all the time. Somebody said that they had just bought a company called Wincanton, which from memory might be a logistics company, and it's a boom time for logistics and supply chain issues and everything else. And so basically, the obvious things can be, let's say, in the large cap space, all BP, Shell, oil prices up, they're going to make lots of money. And I think that you're investing as if you're buying a bond and you're getting a yield and you're hoping there'll be capital growth over the long term, et cetera, et cetera. The only thing is, I suppose, that, large caps are by definition expensive. And a lot of the times the value there is in the price, or sometimes they're even overpriced. Let's say buying supermarkets during the pandemic, or Ocado during the pandemic, you don't necessarily know that the valuation there is a fair one. The reason I like small caps is because if you can find companies which have a good new idea that can be groundbreaking, and or it can be a company which is getting into an area which is very exciting at the moment and is set for growth. So say it was NFTs or crypto or quantum computing or AI or whatever those areas are. And then you tend to have a certain pattern that a company comes in at a 5 million, 10 million pound market cap, and the downside is relatively limited. And you'd have the growth potential of that story. So the small cap area, I think, is good because of the new ideas, the relative the chance that you would have a minimal downside because you're normally not putting very much in. You might be putting £5,000 or £10,000, but you could make £100,000 if you get it right, and you can have 4 or 5 of those situations, and even if just 1 or 2 of them go right, you can do very well as a capital gain. So that's one thing. The other thing I like about small caps, which is something you can see at the moment, is that the macro picture at the moment is very uncertain. You've got things like inflation, you've got things like a threat of Russia taking over the Ukraine or just walking into the Ukraine. I don't think there'll be any war either. They'll just wave them through. But you have a situation like that, which makes the macro situation very difficult. But the macro situation tends to affect the share prices of the larger companies more, and that can be a difficult thing to judge. So I think that I'm always interested in companies which have a new idea, or they have a newly discovered asset, if they're a resources company, things like that, which can I think, be beneficial. But it's just, I suppose, I'm talking in my own book in the sense that I've always been involved in this area because of, stockbrokers tend to be involved in, the smaller stockbrokers tend to be involved in small cap stocks. And my history of the last 35 years has been basically hanging around in the city, in London, with these small brokers looking at small caps. So it's really a matter of being familiar with this area. Obviously, if there's a company like Advance Energy, which was supposed to have a lot of oil, and then yesterday announced that it hadn't found a lot of oil, and the shares went down 90%, that's not very nice.
But this is all the risk. I mean, Zach, I understand your point, because when you are in a current economic situation where either you have got loads of money and you can just basically buy dividend stock and sat there forever. If you are, somebody that is trying to make money, obviously the small caps becomes a better opportunity, because you don't have to put so much, and then you can have high upside. At the same time, it's something that you really need to search. You need to get your information. Maybe for me and you is easy because we have been in the space for quite a while, for you even more. But, there are people that they are actually using this kind of trading app. I mean, I'm going to tell you a story. I've got friends that used to be very, very, very rich. And she was using these trading apps, okay? And at some point she came to me, oh, I'm doing so much trading, I'm making so much money with stocks in the US, all this healthcare stuff. That was 2020. And, the other day I see that, she's really struggling. She lost lots of money due all to this app and following, what actually this network attached to the app. For example, there would be like groups or YouTubers and stuff like that. And she's probably not doing the right taking the right approach, and she basically lost everything, and now she has to sell some of her beautiful assets so that she didn't want to sell because she has to cover those positions. So I guess it is important to say how crucial it is to do research, to learn about the company, and maybe here you can you can tell me what are the element that you look when you are analyzing a company, a part of you read chart, but I'm sure that it's not just going to be the chart, just to avoid the people like this girl. They are just going to be wiped out, and then they found themselves in a position they didn't want to be.
Yeah, I think the easy part, I suppose, is finding what is currently hot. And companies which are hot, they might have a big asset or they might be involved in a new growing area. The best example, I suppose, if you're talking about healthcare, was the rise in the COVID testing companies at the beginning of 2020. And it was, I sort of saw, I think Novosit was probably there. There was a couple of people that I know who are clever on Twitter. And they you tend to get a few people scouts who identify what the latest thing is, or a company which has got a new cancer diagnosis or COVID diagnosis device, something like that. And then from there, I suppose you do look at the share prices and see, well, these shares have been between 5 and 10p over the last 3 months. They're just now 11 or 12p. Let's have let's see if it's going to break out. But the main thing actually in terms of I think gaining in the market is actually to make sure that once you're in something, you don't allow it then to retrace back and then even go into a loss. Novosit went from 10p to 12 pounds, and now it's £2.50. Now you'll have people who went in at £1 or 50p or 20p or whatever it is, and they got out at £10, £12. But then you also have people who got in at £7, £8, hoping for the shares to go higher, and they didn't protect their capital. And I think a lot of this is about protecting capital, which is actually important whether you buy a blue chip stock or whether you buy a small cap stock. And I think there's needs to be much more emphasis on how to preserve your
Yeah.
your capital, how to balance your portfolio, not to have 5 stocks in COVID testing and only 1 stock in oil and gas, or the other way around. And that is the problem. For instance, at the moment, let's say oil is booming, it's probably better to go for and maybe this is near the top. So if you're in an oil company which is currently producing, and the oil price falls back a bit, that's not going to be as painful as if you're in an oil company which hasn't yet discovered anything, and then the oil price collapses. So you have issues like that, and I think it's part of it's common sense. But I do think that people, the biggest nightmare they have is like that Advanced Energy yesterday, where they're in at 3p or 4p. The shares went to 5p, and then today they're at 0.7p. So
Yeah.
So it's managing your risk. If somebody on the bulletin boards, they said that they lost £200,000 on Advanced Energy.
Oh wow! I would rather lose them with Bitcoin.
So it's like, well, okay, mate, you've lost £210,000. That means you probably had £250,000 in this company. What were you thinking? If you thought it was that good, well, then probably if you thought it was that good and it was going to double or triple, then with 50,000 or even 20,000, that would have been probably, you would have made good money. So
but Zach, with oil and gas is always like that, because you get to the point where they do the drilling, and then either there is oil or there isn't oil. I mean, I remember Chariot, right? There was a nightmare when they didn't find anything, and then it went down 90%. So I guess there quite a few people got wiped as well. I mean, I think oil and gas has got the kind of the risky element where you don't want to have everything in that pot when they go to drilling, because it's not the management fault, it's the geology, and sometimes you can't do anything about it.
Yeah, I mean, I think with the small caps, so it's very much seems to be the management and also the asset, and to know that the management are people who know what they're doing, they've got a good track record. And normally it's the case that if you do have good management, then you are halfway there or even more than halfway there. And it's the track record of the management that in the small cap area, I think, is everything. It's a bit like, I suppose, with real estate, it's location. With small caps, yeah. If there's any lesson, it would be management, and then the good thing about the small cap space is that because they're only small cap companies, you can interview them, you can meet them, and you can get a very good idea of what they're like. I'll never be able to interview the CEO of BP, because he'll just tell me to bugger off because he's too important. But with the small cap area, you can get to know a company very well, and knowing the company very well firsthand, you can go out and see the. I went in November. I went to see Tungsten West. I went to near Plymouth where they have their mine. I saw the mine. I met the guys. I was there for a day. You get the whole kind of research and first-hand research. I think is key with small caps. And I suppose having talked about Advanced Energy and talked about your friend, you almost put me off the small cap area, but I think that if you're prepared to have that kind of research effort and that sort of hands-on approach, I think you can do very well with small cap companies. Track record and the management and the track record of the management, I think, are the keys there, and it almost doesn't matter what they're into. With a lot, but I think I would probably, if somebody said, well, you like small caps and it's risky and it's rubbish, I would always say to them, well, if you think that, then obviously go for BP or an index tracker or blue chip companies. The only problem is that obviously over time blue chip companies they change, so it's what's cool at one time can become very uncool at another time. And I'm trying to think of a company which is let's say Sainsbury, it's been an underperformer for years. It shouldn't be, but it has been. So that's the thing, that unless you're a very passive investor in the large cap area, large caps can be equally problematic for an investor. So it's not an easy area. If it was that easy, obviously nobody would be working in it, be investing. But I like the small cap area just because I tend to have a better insight into it than most other people.
Yeah. So you mentioned about you need to identify a sector that is hot, and I quite agree with you on that, because you want to be in the right place when you know, and then you have to find the right company. With a bit of luck, then you're going to be great. But let's look at the hot sectors. So I would put on, for example, now I will put like sustainability, ESG as one. Then there is maybe the commodity like gold, silver. That's what I will put on. And then we have got the new technology. So perhaps something that's got a product that is working and maybe need to scale. And in there can even fall some like blockchain, perhaps good companies. On the other, the last part, I would put some like healthcare, perhaps, you know, gene editing. I know that Clem was also quite keen on that. They might be a little bit longer term, but this is kind of like where we are going. And these are like, I would say healthcare company can also become more like lifestyle, or perhaps could be like food, modification, food research, how to make a better, you know, to improve basically agriculture. That's also quite interesting sector. Which will be your sector that you will look into that right now?
Well, I have to say, I'm not entirely excited about that many sectors at the moment. I suppose the area which looks as though it's quite hot at the moment is lithium. So there are a few small lithium companies at the moment.
It's always been hot, lithium. I mean, I've been in the market for like, I've been talking about small cap for 7 years or 8 years, and always lithium was cool, like rare earth. I mean, all of us remember Macango. So, I mean, it's like, when is not hot lithium?
No, but I think that this is the time, you know, what you tend to have is you have the sort of the first, you know, lithium was hot, I don't know, whatever it was, 4 or 5 years ago. But now I think it's finally, it was too early before. Now I think the time is right. So it's normally this sort of lithium 2. You know, the 2.0 time tends to be the best one. We've already had, like, say, NFT 1.0, and I'd be looking forward to maybe the second proper move on NFTs next year or the year after, something like that, once the bubble has burst. And probably also, you know, the crypto area is having a little bit of a pullback at the moment. Wait another year for the dust to settle, and maybe, you know,
a regulation to kick in.
Well, no, but there can't be regulation, because the whole point of crypto is it's unregulated.
But Zach, that will need to happen, because if we are talking about small cap listed on the stock market, then I think, for example, something that is going to be a very hot space is definitely going to be DeFi. And in order to have a DeFi accepted by the stock market, you will have to have some element of regulation, wherever stablecoin are going to get regulated, or you know, digital assets in general, because otherwise, you know, you have to stick to the miners, or you have, I mean, it's kind of, it's not going to be easy to get a DeFi project listed on the stock exchange.
Yeah, but the whole point, the reason that crypto exists is because the stock market and the financial markets are overregulated. They're idiotically overregulated. So if the stock market hasn't been overregulated, especially since 2008 with the crash then, crypto wouldn't be here. It's only here because it's just idiotically overregulated. That's what I talked about before, you know, last week, or what a rant I had before. So yeah, either the stock market becomes less regulated, or you know, the crypto area has to be and will continue to be you know, sort of running free. All these coins, they're just all the coins are effectively just unregulated, small cap stocks. That's all they are. There's no difference. And it's like Cardano or Luna or whatever it is. All those things might as well just be shares, but they're just unregulated shares, and that's the way it works. The whole beauty of it is that it's unregulated, and in general, apart from the volatility and losing you're losing a wallet or whatever it is, that system works just like the Wild West. I think the regulation's gone too far, and I don't think there's any. If crypto was regulated, it would just be like the stock market. That would be the end of crypto.
That is interesting, because when I'm talking to crypto projects, most of them, they are actually pro-regulation, and they want regulation to kick in order to make crypto more mainstream. So it's an interesting point, and obviously we will see where things goes. But I definitely get your point. One of the two will have to kind of lose something. Either is going to be the traditional regulated space that is going to lose up and embrace a bit more, how can I say, creativity and innovation with crypto, or is going to be the crypto that is going to be a bit more corporate and institutionalized. So we will see where,
I think that it's actually it's probably in the right place now, that there is some degree of, you trade crypto on Coinbase, or you trade crypto on Binance, or whatever it is, that, they are sort of proper entities. I think that's about the right, level. I don't think that there's any point regulating cryptos. I mean, the fact that the Chinese have banned them, it shows that it's not the way to go. Whatever they do, I would do the opposite anyway. So
it is interesting. Some EU regulators, they came out, I think it was yesterday, saying that actually proof of work mining should be banned. So that will apply basically to Bitcoin and Ethereum as it stands on proof of work. And that was quite interesting, because then, we might see more like a push towards more like sustainable proof of stake chains. So, I mean, the government, they can influence the crypto market. And
no, the only reason there's these initiatives, is so that they can, at the end of the day, the government sees an area which is booming and it wants to tax it. Regulation is just another word for taxation. Do I want crypto to be taxed and everything else? Well, no. So that's, I don't want to do anything which helps more things get taxed. I think we have enough tax as it is. And in fact, what they should say, in a way, it'd probably be better to say, well, actually, we're not going to regulate crypto, but we would tax it, or we would charge a fee on it, or something like that, but not come up with these silly rules and regulations, which basically, crypto met a need. It's meeting a need for digital, transactions and digital transfer of money. It's a fantastic new technology, and the last thing it needs is for some pen pusher somewhere to start ruining it and start and just getting rid of the whole point of that technology. So just like everybody starts driving a car, and you start after the horse, and you start saying, well, we're going to try and stop people driving cars because horses are better. I mean, it doesn't make any sense. So crypto is, but the main problem actually is, as I said, the financial markets, that the normal ones are over-regulated, and a lot of the stock market has been ruined by the over-regulation and the cost and everything else, and that's why we have crypto, because it's a free market.
So Zach, let's talk a bit about some cryptocurrency and some maybe small cap gems that I like, that you like. I know that you have been looking into the crypto over the last few months a little bit more in depth. So if there are some cryptocurrency that you will say, right, those one definitely in 5 years, they're going to make me a millionaire. Which one would you pick?
I think the one that I would pick purely on the basis of the chart, because I think it's still looking very good, even with the last few weeks have not been great for the crypto space. I think is Luna, and I think that'll go through. I think that's my favorite. I think that'll go through $100, and I think that could be a 10 bagger over the year. Don't ask me what it does or what anything about it at all. But that's the one that I see it as a consistent technical situation, and maybe I'll do more research on it myself. But that's the one that okay. I like the most. Also, it's not one of those micro cryptos. I think it's sort of something. It's almost like once something gets through $10 or something like that, it's almost a bit like penny shares. Once you get through 10. Once you get through $10, I think you start becoming serious.
Exactly. I like that point, because actually, I mean, if you are really picking the micro one, you really need to believe in the project and be also prepared to wait sometimes, because it's not that everybody goes to the moon in a week or overnight or even in a couple of months. So I think that's actually a good point. So you will say when it breaks $10, then it's something worth to look a little bit more closely.
Yeah, that sort of thing. I think it's but it is something that you're not like being by that time it's probably it's here to stay. It's probably a decent platform or offering, and I think that's a sort of little rule to go by. It's the same in penny stocks as well, and I think that's a good general rule of thumb.
Okay, so you like Luna. I personally, I quite like Matic, and I quite like Umbria Network, which I know is a small cap, very, very micro cap, hasn't reached the $10 target that we are talking about. But I'm sure that it's going to be, it's got the fundamentals to be a very interesting project, and definitely is going to grow, particularly because the focus is interoperability, is building bridges across chain, and I'm working with the team, and we are making great progress, just implementing the Binance Smart Chain bridge. So I'm sure that we are going to grow more and more. So I'm like for that, I would say maybe, okay, I'm talking my own books, but but that's it. And then I think then there are other projects, other big blue chip DeFi project, which I think they already proven they're here to stay. So they will be definitely growing. And then perhaps is looking at the NFT space. Then is a question to find the one they actually have a proper use cases, and they are also backed by some good investors and have good management team. So I think probably the NFT small cap is something that can be quite interesting. There are so many new games, play to earn games that are popping up, and that's where their own currency is used in the game, and for transactions. So I think NFT small caps that you can find, if you find the right one, then you can perhaps get some really good upside if you want to be a little bit more adventurous.
All right. Well, I'll just finish off with one stock which I noticed today. Okay. GS Technologies. The news today was that it's a sort of it's in the sort of it's a very techie type of company. But the news today was that they acquired the Lithuanian crypto exchange license, and they've expanded their fintech business. So I think that's a company that maybe you should or could read up about.
Okay, so can you tell us the ticker?
GST.
Oh, yeah, okay, gotcha. Golden State Technologies.
That's right. So I think they've just changed to more trendy GST now.
It's more trendy, yeah, exactly.
Yeah. So I think that's the sort of company that looks like it's sort of slowly getting there, and not too highly valued, and they seem to know what they're doing. And the news flow, every time every bit of news flow seems to follow on well, and they seem to know what they're where they're heading. So I think that's an interesting one. Maybe you know that company as well. So there we are.
Okay, that's a good one to look. And then I wanted to ask you last question is kind of like to pick your brain on another sector that I don't think we ever mentioned in this show, which is space investing.
Yes, I think there was an IPO last summer called Seraphim, which I think is SSIT, the code, I can't quite remember. But that floated at a penny, and I think it's near 125 now. And it's basically like a fund which invests in space activity, let's say. And so that looks to be and has been like the more, they seem to know, they raise a good amount of money, seem to know what they're doing. And so maybe that would be for me the one on the UK market, unless you're buying SpaceX or whatever else there is around the place. But
yeah, exactly. When do you think? I mean, do you think this kind of stocks has got scope for a short, medium terms profitability or high return for investor, or do you see them more like a long-term play?
I think they're a long-term play, but hopefully the way they're structured, you won't have the sort of the rocky ride that you might do if you just invested in one company. So I think that's probably, as it's a new and volatile area, it's probably one which is worth investing in that kind of fund type vehicle rather than taking a chance on an individual.
Yeah, I mean, it is very interesting. What I'm like a bit concerned is it's not like with like a tech company that maybe has got a product or a mining or oil and gas, where at some point you're going to see a revenue coming in. I mean, with space investing, I think you're going to be investing for quite a few years, maybe decades, until you can get some kind of profit.
Yeah, well, you're young, so you have time on your hands. But I just think that hopefully this area will expand in the next 10 years. I'm not sure how much, the sort of the ESG aspects and the other, there's sort of moral questions about space travel. That we're starving on Earth and everybody's going to Mars is possibly not a great look. But I think that in general, if you want to get involved in space, it's probably in a fund that hopefully knows what it's doing. Yeah,
exactly. Okay, Zach, thank you so much. And I will see you next week.
Not the same without Clem, is it?
Exactly. So we can explore a bit more, crypto and also maybe some more value investing, where I know that we like the small caps, but Clem is standing at the other side.
Thank you very much.
Thank you, Zach, and thank you everybody for watching.